Guys, the news in New Zealand lately is really frustrating. Credit rating downgraded to negative, fuel prices keep rising, mortgage interest rates are all over the place, and if you have investments or even just use NZD, you're probably wondering, how does this hit the stock and Forex markets? Do you feel like your money is stretching less and less, even your savings or investments? I am Eric from Market Meridian Finance.no. Fluff today, just pure value. I'm going to show us ordinary people how to spend less, stabilize cash flow, and understand exactly how the negative rating affects NZ stocks and the NZD, so you can protect your money, no hassle. Watch till the end, and you'll save hundreds of dollars and avoid investment mistakes. Remember to like and save this video, you don't want to lose it. First, don't panic. Let's figure out if these two things actually affect us, especially when it comes to stocks and Forex. 1. Negative credit rating. Simply put, the market is worried that New Zealand can't pay its debts. This makes it more expensive for banks to borrow money, which means our mortgage, car loan, and even credit card interest rates will only get higher, not lower. Also, the NZD will weaken. We'll talk more about that in a minute, making imported goods, like fuel and electronics, more expensive, and prices will keep rising. On top of that, this uncertainty hits the stock market too. Let's break that down. Point 2. Skyrocketing fuel prices. Do I even need to say more? Filling up a tank costs tens of dollars more than before, and commuters are hurting every day. This is also the area where we can save money right away. But fuel prices also tie into the economy. Higher fuel costs hurt businesses, which in turn affect stock prices. To sum it up, over the next period, money will be less valuable, interest rates will be higher, stocks may be volatile, and the NZD will be weaker. Our core goal is simple: spend less, save more, don't mess around with investments, and understand the risks. Let's quickly cover the part you might be asking about, how this all affects NZ stocks and the NZD. No fancy terms, just what you need to know first. NZD, Forex market. The negative credit rating makes investors less confident in New Zealand, so they sell NZD and buy more stable currencies, like USD. This makes the NZD weaker, meaning your NZD buys less when you travel overseas, import goods, or even buy foreign products online. Morgan Chase even recommended selling NZD recently, citing weak economic growth and mortgage tightening prospects. Also, since many NZ banks are owned by Australian institutions, any negative news for Australian banks, like credit rating cuts, can also push the NZD lower. Second, NZ stock market. Volatility is the name of the game right now. The biggest hits will be to two sectors: banks, since higher borrowing costs hurt their profits, and NZ's high household debt and current account deficit at risk. Real estate, higher mortgage rates mean fewer people buy houses, so property stocks drop. Also, local government debt is among the highest in the world, which could further pressure related stocks. For ordinary investors, don't panic sell, but don't buy high-risk stocks right now. Stick to stable, low-risk options if you're investing. Quick note, this isn't financial advice, just a heads up on what's happening, so you can make smarter choices with your money. First priority, fix the fuel cost. This is money we can save every day. 3 ways, just follow these. Choose the right time and tool to refuel. Download the Gaspy app on your phone, it shows you the cheapest gas stations near you. A 10c per litre difference saves you $5 to $8 per tank. Also, only refuel on Tuesday or Wednesday every week, avoid the price hikes on Friday and Saturday. This is a little trick for NZ gas stations, tested and proven. Don't drive alone to work. If your one-way commute is over 10 kilometers, carpool with colleagues or neighbors, fuel costs are cut in half. For short trips, 1 to 3 kilometers, walk or cycle if you can. Most towns and cities in New Zealand are great for walking and cycling, and it's good for your health too. Change your driving habits, don't step on the gas hard or brake suddenly. Keeping 90 to 100 km per hour on the highway is the most fuel-efficient speed. Also, clean out the clutter in your trunk, don't let your car carry extra weight. This can reduce fuel consumption by about 15%, and the savings add up over time. How much do you spend to fill up your tank now? And do you have any investments in NZ stocks or hold foreign currency? Tell me in the comments. Let's chat. Once we've fixed the fuel cost and understood the stock Forex impact, let's deal with the bigger picture. These 4 things are our bottom line. You must do them. 1. Lock in mortgage risk. Biggest expense if your mortgage is on a floating rate, don't keep it all floating. Fix at least half of it for 2 years to lock in some costs and avoid further interest rate hikes. Pay extra principal if you can. Even an extra $100 per month saves you a ton of interest in the long run. This year, never buy a new house, take out extra loans, or get a renovation loan. 2. Protect your cash flow. After getting paid every month, save 10% first, then spend the rest. Build an emergency fund of at least 3 months' living expenses, kept in an easily accessible account. Don't invest randomly, especially not high-risk stocks or crypto. Having money in hand gives you peace of mind, especially with stock market volatility. 3. Fight rising prices and weak NZD, buy fewer imported goods, like overseas online shopping, luxury brands, and new cars, since weak NZD makes them more expensive. Prioritize local New Zealand seasonal fruits, vegetables, and meat. They are not only cheaper but also fresher. Also, compare prices for insurance, broadband, and electricity every year. You can save hundreds of dollars. If you travel overseas or need foreign currency, don't exchange all your NZD at once. Do it in small batches too. Avoid losing money from a weak NZD. 4. Never fall into these pitfalls. Don't take out high-interest consumer loans or stretch car loans to 5 to 7 years. Don't invest in real estate or crypto with high leverage. Stability is the most important thing right now, especially with stock market volatility. Don't quit your job without a backup or start a business blindly. Having a stable job is more valuable than anything. Okay, to sum up, no need to be too anxious. The core of our response as ordinary people is, drive less and refuel smartly when fuel prices are high, borrow less, save more, and avoid high-risk investments when the credit rating is negative. And remember, weak NZD means fewer imported buys, and volatile stocks mean stick to stability. No complicated operations, just do the things I mentioned today, and you'll save hundreds of dollars per month and protect your money from stock and Forex risks. Getting through this period smoothly is totally possible. If you want a more personalized money-saving plan, like calculating how much you can save per month based on your mortgage and commute distance, or tips for protecting your investments, tell me your situation in the comments. Mortgaged, renting, commute distance, singles, family, any investments, and I'll make a personalized budget for you next time. Finally, remember to like, subscribe, and I'll keep sharing money-saving, stock, and Forex tips for ordinary Kiwis. See you next time. One more thing, don't forget to use countdown and new world fuel vouchers, save an extra 6c per litre. And if you have NZ stocks, avoid panic selling, stay calm and stick to stable options. Thank you for watching. Please give me a thumb and subscribe my channel.